guys, welcome to accounting. Today we're going to talk about a trial balance again, but I wanted to show you a couple things before we talk about today's assignment. You see on your screen here, we've talked about Lawson Company before, but we're looking at Lawson Company's trial balance for the month as of June 30th, 2020. I'm going to say this is 2020. Now, let's look at what goes into a trial balance. Remember, a trial balance is a financial statement, but it's an internal financial statement. It doesn't go anywhere else. It's for the internal management, and it helps the accounting personnel prepare the financial statements for the time period. Now, this is a way to show that your debits and your credits are in balance. And you see the total debits equal the total credits. Now we're going for the accounting equation again, because remember, assets equals liabilities plus owner's equity or capital. So your debits here are your assets, and here is your liability, and then the rest of this goes into capital, because remember, this may not show capital here for revenue and expenses, but remember, you prepare your income statement from revenue and expense accounts, and that net income or net loss number goes into your statement of owner's equity, which takes into account your capital account, and then the ending capital account balance from your statement of owner's equity goes to your balance sheet. So all of these accounts work together, and you need to see at the very beginning, you need to make sure that your debits and your credits are equal. Now, keep in mind, this doesn't mean that all of your accounts are correct, because you might have transposed an account, or you may have, for example, called a utilities expense a truck expense, or something like that. You may have put it into the wrong account, or you may have made a transaction backwards, and it would still balance as debits and credits. But this just tells you that you have an equal number of debits and credits, so that's a good place to start. Now, there's a certain way that you put a trial balance together. Notice, again, the title. You have the title of the company. You have the name of the statement. It's the trial balance. And then you have, for the trial balance, this is kind of like the balance sheet. It's a snapshot. As of this day, these are the account balances that you have. Now, it's not for the month ended, for the week ended, for the quarter ended, or whatever. It's just as of this point in time, those are your account balances. Now, you list them by account titles, and they go in a specific order. So in today's assignment, you're going to be given a list of an alphabetized list of accounts, and you have to put them in proper order. Now, these are the proper order. This is the proper order you put it in. You always start with your assets. Cash always goes first, because you put your assets, and you have 4 of them in this list. You have cash, supplies, office equipment, and truck. Now, you put assets in order of what is called liquidity. Liquidity is how quickly they are turned into cash, or how quickly they're going to be used. That's why cash is always first, because cash is already cash. And then supplies, you know you're going to use supplies before you use office equipment. Office equipment would be like a desk, a chair, a computer, something like that, that's going to last a while. Supplies are usually used within the accounting cycle, so they're listed first. Now, if you had something like accounts receivable, that would go right after cash. You would have cash, then accounts receivable, and then supplies. You always put them in the order of how quickly they're going to be turned into cash. Then office equipment is next, and then truck has a longer lifespan, so truck is listed after office equipment. And these are all of the assets that you have for this account, for this company. And you always list your assets first. Then you list your liabilities, because remember, you have to go in order of the accounting equation. Assets equals liabilities plus capital. So liabilities comes next, and accounts payable is the only liability that you have. And remember, a liability is something that you owe. It's a debt. And then you have the capital account. There's only one here, but if you had a drawing account, it would be listed after the capital account. So you have capital, and then you would have drawing, and then the next thing you have is your revenue account, because that comes next. And then you list your expense accounts. Now your expense accounts are normally listed in alphabetic order. And you see these are, you have three of them: salaries, truck, and utilities expense. And these are listed in alphabetic order. So this is the way that you prepare your trial balance, and then you will put the corresponding amount, whether it's debit or credit. And you see your assets have a normal debit balance. Your liability has a normal credit balance. Capital has a normal credit balance. If you have a drawing account, it would have a normal debit balance. Revenue has a normal credit balance, and all of your expense accounts have normal debit balances. So you will list them in the corresponding columns, and then you will total your debits, and then you will total your credits, and the debits and the credits have to equal.